So, what should be included in your business plan presentation? As we said in our introductory lecture for quarter 5, you have to base your business plan on the strategic analysis, show your corporate strategic plan with objectives for not only the corporation, but also each function. Create a tactical plan that is synergetic with your strategy through quarters 8 and include pro forma financial statements through quarter 8 to show what your financial situation will look like, and will include some sort of a risk assessment for the venture capitalists. In your strategic analysis, you should focus on the nature of your business opportunity. What is it that the opportunity you pursue can be described as? You need to look at the performance to date. You need to assess your competitors, and you probably need to create a SWOT analysis of strengths and weaknesses of your firm compared to competition, as well as external opportunities and threats that you see in the marketplace that might open new opportunities for you, or that you have to combat because they are threats for the survival of your business. So when we talk about the nature of your business opportunity, you need to address market potential. What's the total potential? What's your segment potential and region potential? How do you stack up? Why are you pursuing these strategies for your business? You can look at the demand served to date, but you also have to look at opportunities in development through your market research to see where the best opportunities lie in the future. So the first thing you have to then do in your strategic analysis and review is to look at the performance of your business after the quarter 4, which is the first year. What's your market position in the segments you chose to follow, in the geography that you chose to approach? Look at your market performance. What's the demand? What's the demand for your product? What's your market share? How do your customers perceive you in regard to the satisfaction on your brand, price, and reliability? What's your financial performance and your profitability? So cash is king, as we know, and what's the profitability with the actions you have taken so far? In your corporate strategy, you should address your overall mission. You talked about that in quarter 1 when you set up your firm. Look at the corporate objectives that you have as the goals that you are trying to achieve. Show the venture capitalist what you consider is your basis for competitive advantage. And are you creating competitive advantage through product differentiation, cost strategies, looking at certain target segments? And maybe you want to have some key performance goals that you want to achieve by the end of the second year. It might be a good idea to compare them to what's happened after quarter 4. Each functional strategy should be thoughtfully prepared. It should show how the functional strategy supports the overall strategic thrust. It should have a clear outline of the tactics to support the overall strategic thrust. You need to list the key decisions to be made over the next 4 quarters, quarters 5 through 8. And you need to make sure that there is a link between the decisions you make tactically and how they support the overall strategic thrust. It is very important that for each functional strategy, you have key performance goals noted that you want to achieve by the end of the second year. That improves the trust of the venture capitalists in your preparation and that you really know what you're talking about. Of course, we need to consider marketing issues. We need to consider the portfolio of brands that we intend to have versus what others might have or have already. We need to develop new brands because with the R&D investment, we can create new features that is going to make our brands more powerful and more satisfying for customers. When it comes to the R&D investment in new brands, we have to be very careful with the timing of the introduction of new brands. And that has to be clearly displayed to the venture capitalists. We need to figure out what kind of pricing strategy do we want to follow. Skim, trying to get the top of the market versus penetration because we want to create market share. We need to look at margins. We need to really make sure we understand margins because the margins are really the basis for our net positive cash flow at the end. We need to figure out advertising, not only the themes, but also the volume for each of our segments. We need to look at our sales channel, look at whether we emphasize the brick and mortar sales offices versus web marketing, and figure out whether we want to expand geographically. If we do, either expand geographically or expand within the geographies we're in, we need to look at the timing and the order of either new markets or the expansion of sales offices, regional web centers. We need to make sure that we are looking at expanding traffic, and we need to figure out how we improve our productivity in our channel, sales channel, both brick and mortar as well as on the web. Human resources are actually a contributor to overall bottom line. Should we minimize expense or maximize productivity? That trade-off needs to be at the forefront of the development and presentation. Should we be an industry leader or should we be a follower? Should we have different compensation schemes than other companies? Should we have the same employee benefit schemes? And we need to figure out how we manage our compensation over time if we plan to change the compensation over quarters 5 through 8. Manufacturing, really important. We need to make sure that we look at projected demand by quarter that will have an impact on our planned expansion. How much should we expand? When should we expand? And what size of investment do we need to expand? We need to make sure that we are continually improving our productivity, both through changeover investments as well as quality investments in our production, which improves reliability and helps our marketing team. Our finance manager is really important for this part of the presentation because he or she need to be in charge of what cash flow requirements do we have, where is our capital coming from? Is it from the venture capitalists? Is it from the banks, either short-term or long-term loans? And we need to have a very clear understanding from your finance expert what the profitability and asset projections are for your firm. You need to provide a target of return on investment for your venture capitalist. So don't forget that the venture capitalist is there to earn money on their investment. And they might actually want to cash out at quarter number 8. So make sure that in your ask you not only have what you want at what stock price, but also what you promise them as a return on investment after quarter 8.